I don't know if you're going to get a major breakthrough there. I mean, we estimate that if the tariffs that were announced went into effect, it could take as much as 1% off of China's growth. We put out a special report on how to look at geopolitical risks. 50 of our analysts collaborated on this report, and it looks at U.S.-China trade. It also takes a look at the midterm elections and Iran.
What do we think Xi was trying to tell the world at this trade fair?
I think that what they're trying to tell the world is that, we're in an integrated global economy, that the trade wars are a lose-lose situation all around for the U.S., for China, and, for the rest of Asia and the emerging markets as well.
When he talks about the law of the jungle, is that a swipe at the president, as some have suggested, or not?
I think it is a call for looking at the way that negotiations had occurred before, that there had been a trend towards globalization and collaboration and rules of the game, and to go back to a framework that had been in place.
You mentioned you just did this big report on the midterm elections. How are you telling investors to position themselves?
Well, I think it's going to be a bit of a non-event from a market's perspective, quite honestly. I think there's going to be more focus on the trade wars and on Iran than the midterm elections. But what we found in looking at geopolitical risk is that some of the best hedges are not the ones that people think actually have been the conventional wisdom. Like, we don't think it's gold. We don't think it's the yen. It's really been to be short equities, short U.S. high yield, and also to stay long vol.
Why do you think the midterms are a non-issue for investors? I mean, you've got policies out there like more tax reform, deeper stimulus, deregulation, infrastructure spending, trade, so many issues that matter to the markets and that could limit the president's ability to get it done.
Well, the trade issue is one where they have not gone through the Congress, and that's gotten a lot of market attention. But the tax reform, which was comprehensive, actually already went through and is already in place. So some of the things the market will focus on is, risk of a government shutdown. I think there's skepticism, given the size of the deficit, that you can really do more deficit spending for infrastructure, and that even for tax reform 2.0, that might be difficult to proceed.
Take me back to China for a second. Certainly signs of significant slowing perhaps in the Chinese economy. A lot of discussion about whether they're going to try and stimulate beyond some of the smaller tax cuts they've offered and go perhaps further in for a broad income tax cut or corporate tax cuts. Do you think that will be the case?
I think that China will respond with a mix of the currency and also putting in more stimulus measures, and we've seen what they've done with the reserve requirements, but I don't think it's going to be anything that dramatic. And we've taken the China growth forecast down to 6.1% for next year. We think that if these tariffs do go into effect, that they'll be able to offset more than half of the impact of the decline in growth. But I think it will be more along the lines of what we have already seen over the past year.
And do you expect that they will that we're going to go to 25% as of the first of the year, and that not much is going to come out of the G20?
That's been our working assumption so far. So we have to see what happens at the G20. There have been a few more conciliatory remarks, but right now there's no signs of a breakthrough. So we have put that in as our working assumption for right now.
Does 7 stop being a magic number on the yuan, and does that raise the ire of Treasury here?
I don't think that 7 is a magic number. I don't think there is a magic number, quite honestly. But I do think that you will continue to see, gradual moves. And I think, 7 is a level that the market is focused on. Is
there a correlation between whether or not the House flips and Treasury yields right now?
I think the House flipping is now consensus. The news would be if something happened in the Senate. I don't think there is actually much of a correlation with Treasury yields on that front. I think the expectation is that it will be a House flip, but with a relatively small, majority. If it were to be something more dramatic, you could see Treasury yields move, like if it were like the 60 seats that happened, in the first Obama administration. But I don't think that's what's likely to be the outcome.
Yields lower if that happens?
Well, I think, more uncertainty. Yeah, so yields a little bit lower.
What if it doesn't flip?
I think if it doesn't flip, it seems to me that will be one where the questions will come up. I mean, much as you asked, like, could there actually be more stimulus measures, forthcoming? But I don't know if you're going to see that dramatic a reaction if it's just about the House. I mean, because you really would need to see the Senate turn.